And we'll start the recording. So welcome everybody to our GoToWebinar. If you're viewing on the GoToWebinar, and welcome to the YouTube channel. For those of you that are on YouTube, it's great to have you with us. Just waiting for the screen to kick in over there. And there it looks like it's getting ready to go. Seems like on YouTube you get a little commercial to start. Well, welcome everybody. Great to have you with us. Tom in Burlington, Ken just up the road in Brooks from Lethbridge. Peter, welcome. And John, welcome. Yeah, great turnout. Albert from Edmonton. So great to have you all with us. And now things have kicked in on the YouTube as well. So Robert, good to have you with us in PEI as well. Says it's like spring out there. And I'm broadcasting from Lethbridge, Alberta. And again, it's Stan Heller with VectorVest. So great to have you with us. We've got an exciting program again today. An update on the CDRs, the Canadian Depositary Receipts from our friends at CIBC. Really looking forward to that, to see the changes that have been made since we last met about the CDRs back in November. We had a great presentation, and we'll have another presentation again today. So excited about that. Let's just see now what I can do here. And making sure everything is working along. Okay. So I'm going to move on and just do a quick disclaimer. Just know there is risk in investing, and everything you will see and hear today is provided for educational purposes, should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so welcome everybody. Great to have you with us, and lots of people are chatting in on the YouTube channel as well. It's great to have all of you with us, whether you're on YouTube or whether you are with us on the GoToWebinar. It's great to have you with us. So today we're going to learn more about the Canadian Depositary Receipts. There's been lots of new additions since we last met in November, and I'm sure there's many more things to come. We've got our guest speakers, our keynote speakers from CIBC, who I'll introduce in a minute. But just to let you know the format today for this Canadian Regional Online Forum, we will have our presentation about the Canadian Depositary Receipts from our guests, and then I'll take over and finish it up with a review from VectorVest, show you where to find the CDRs in your VectorVest software, how to analyze those CDRs, the performance to date, and how that performance of the CDRs has matched up with the performance of the underlying shares or stocks on the US market. I think that'll be very interesting. Some of you have asked me about that this week, and so I certainly wanted to show you that. So lots of information, and I think you're going to be really pleased with what I'm going to show you about tracking the CDRs, when to enter, when to exit. I've got some rules that you might want to consider, and I'll show you on the graph layouts what I'm looking at using the Guppy EMA squeeze that a lot of you are familiar with now. Sandy's asking about the slides, and I believe VectorVest will be sending out the slides with sort of the link, Sandy, to the recording and to the YouTube channel. So that will, I know you're always interested in that, and everybody is, and we'll make sure that you get those slides as well. So without any further ado, I want to bring in our guests and introduce them to you. Once again, we have Elliot Scher from CIBC. He's the Managing Director and Global Head of the Wealth Solutions Group. So welcome, Elliot. And Alex Satan, our Director, Wealth Solutions Group for CIBC, is our other guest speaker. And Alex is actually going to kick things off for the presentation. So Alex, I see your mic is activated, and I'll just click to the next slide and you're ready to go.
including access to global companies in Canadian dollars, which eliminates the cost of currency conversion, a built-in notional currency hedge to mitigate currency risk, and fractional share ownership to make high-priced stocks more affordable. So far, we've received a lot of positive feedback from advisors, investors, and the media, and we have had a lot of growth in the program, which has been really great to see. Go to the next slide, please, Sam. So CDRs were first introduced to Canadian investors in July 2021 when we launched the first CDR on Amazon.com under the ticker AMZN. As you can see on this slide, there are now 23 CDRs trading on the NEO exchange. To make things as easy as possible for investors, most of the CDR tickers follow the same symbology as the US share. In cases where the US symbol was already used in Canada by a different company, so for example, V was already taken in Canada, for Visa, we substituted with a ticker that we felt was straightforward and intuitive. So in that case, we went with Visa. Based on the growth and demand we see, we'll continue to launch more names, so we won't stop necessarily at 23. So to the extent that you have any names you would like to see, we would love to hear them. Go to the next slide, please. So CDRs have a lot of similarities to a direct investment in the underlying share. Both are exchange listed, eligible to be held in registered accounts, and have entitlements like dividends. As with the underlying share, T1135s will be applicable from a foreign property reporting perspective, and withholding tax may be applied for dividends. This means it's important that investors ensure they have the correct W-8 form on file with their dealer. With regards to purchasing CDRs, it's done in the exact same way as purchasing the underlying share. Regardless of where investors have their accounts and what trading platform they use, they can buy or sell CDRs. They've been designed to look and feel like owning any other equity in an investor's portfolio. Where they differ is where we see the value propositions of investing in CDRs. So that's the Canadian dollar denomination for trading, currency hedge to shelter investors from movements between the US and Canadian dollar, as well as a fractional share ownership. Overall, with CDRs, we're trying to improve the process, lower the cost, and reduce the risks, ultimately removing the barriers associated with global investing. We'll move to the next slide. So as mentioned before, CDRs address three primary issues of global investing for Canadians. And the first is that certain shares are just too expensive for retail clients to own. As an example, the first CDR we launched was for Amazon.com, which is trading around $3,000 US per share. At prices like that, shares can be very difficult to include in portfolios. However, the Amazon CDR is trading around $20 Canadian per share, making it a lot more accessible. And we were able to set this initial price at approximately $20 because CDRs create fractional share ownership through a concept called the CDR ratio. This concept of a ratio isn't new. All depository receipts, including ADRs, have a concept of a ratio. And the difference with CDRs is that it will typically be less than 1. So going back to the example of the Amazon CDR, it was launched with a 1 to 200 ratio, meaning one share of Amazon was equivalent to 200 Amazon CDRs. And through the ratio, we're effectively taking a whole share, breaking it up into fractional units, which can then be traded in whole units on the exchange. This fractional share ownership concept can be useful when looking to fine-tune or have more flexibility in managing portfolio allocations. The second issue of global investing is that investors are now exposed to currency risk. Currency hedge ETFs are very popular investment solutions in Canada for this very reason. And CDRs have the same feature, just on a single stock. The notional currency hedge will help mitigate any impact on the investor's return from moves in FX, and it can be helpful to reduce reporting noise for investors, as everything will be in Canadian dollars and performance will track that of the underlying. And finally, the third issue is that in order to invest in global companies, you need to convert your Canadian dollars, which can be a costly and administrative burden. With CDRs, there's no need to convert and deal with FX transactions and fees. And on top of that, investors receive institutional level FX rates for any transactions done to manage the product. Overall, given this set of features, we have seen interest from self-directed investors, advisors managing client portfolios, and institutional investors. I'll now pass it over to Elliot.
We'll just get
Next slide, please.
There we go.
Perfect.
All right.
So thank you, Alex. Next slide. Perfect. So this slide here, I'm going to talk about how CDRs track their reference shares. And Stan mentioned this earlier. This chart here compares the return of the NASDAQ listed Tesla shares to the Tesla CDR. So the Tesla CDR was launched in August 2021. So this graph has one of the longest track records out there. It's great to see it's now probably 7 months in, and we're still nowhere close to how long it took us to actually bring the products to market. But soon, we're going to see these charts equal as the same length that it took us to get through the process to get regulatory approval for CDRs in the first place. So love seeing this chart grow. So let's talk about the CDR tracking here. And to be clear, we're not making a recommendation. We're showing this graph for comparison purposes only. And as I hope you can see here, the tracking of the Tesla shares has been exactly as advertised. So over the 7-month period, the performance of the CDR has mirrored that of the US share almost perfectly. Hopefully you can see on the screen here, there are actually 2 lines on that graph, a red and a blue line, one being the NASDAQ listed share and one being the CDR. So over this time period, there has been a difference of about 0.8%. And this is what investors should expect going forward. There are a few reasons why these lines won't ever track perfectly. The biggest of which is that CIBC earns our fees for managing the currency hedge. Every depositary receipt in the world is issued by a depositary bank, and all of whom are for-profit institutions. Some depositary banks earn their fees on dividends, some charge a program fee. We make our money for managing the currency hedge. So as we disclose in our prospectus and the marketing material, the maximum that we can earn for managing the currency hedge is 0.6% per annum. So this works out to be about 0.0024% per trading day. By way of comparison, if you're familiar with currency hedged ETFs, our spread is in line with the spread paid by those funds to the banks that they manage their currency hedges with. The other reason why these lines won't match perfectly is because our hedge isn't a theoretical hedge. We are actually entering into FX hedge transactions on behalf of CDR holders every single day. As a result, if there's a interest rate differential between the US market and the Canadian market, this will impact tracking, as will volatility in the FX markets and equity markets, which we've actually seen quite a bit of as of late. The bottom line is that while CDRs will never perfectly track the underlying shares, they are a very cost-effective approach to global investing as compared to buying the shares directly in the US market, and they mitigate that additional currency risk. Stan, next slide, please. So this next slide talks about the liquidity of CDRs. The question of liquidity and the fact that CDRs have lower trading volume than the US listed shares is a concern that clients raise with us quite a bit. We repeatedly tell clients that a CDR can have low daily trading volume, but still be very liquid and trade with a tight bid-ask spread. This is the same argument that ETF providers like BlackRock and BMO and Vanguard have been making for years. We can make the same argument for CDRs because CDRs use the same trading and market making infrastructure as ETFs do. Simplistically, we tell people to think of CDRs as the world's most simple ETF. CDRs are basically an ETF of one stock. In order to assess the liquidity of an ETF, it is important to look at the liquidity of the underlying portfolio. Generally speaking, if the portfolio has high trading volume, then the corresponding ETF is expected to have a high degree of liquidity. Similarly, in order to assess the liquidity of a CDR, it is important to look at the liquidity of the underlying stock, which is the single US share. And since CDRs reference the most liquid US shares, like we were talking about Tesla earlier, they too should be very liquid. Without getting too technical, the reason this is possible is because the market makers who are responsible for quoting the bids and the offers every second of every trading day on the exchange, they do not have to match the buys and sell orders for each client transaction to facilitate a transaction. For example, if they buy an Apple CDR from an investor, they can simply sell Apple shares to hedge themselves. And since Apple is one of the most highly traded, most liquid US shares out there, it is very easy to do so, and in any size. In fact, the shares that we've been linking to are more liquid and have a higher trading volume than pretty much every single Canadian share listed on TMX. So that having been said, I will also mention that CDR trading volumes have been increasing quite a bit. This is because market adoption for CDRs is really picking up. In August 2021, when we launched the program, we were generally seeing trading of about $5 million per day across the program. We are now regularly over $20 million per day. And with the recent market volatility, we've had a couple of days where we've almost hit $50 million of trading volume in a single day. And interestingly, there were a number of days during the tech earnings season where Tesla, Netflix, and Amazon CDRs were the top 3 traded securities from a value perspective on the entire NEO exchange. The Tesla CDR itself has been the most active NEO-listed security on a number of occasions. And remember, this program is still quite new. More than half of our CDRs are less than 2 months old, so we expect and we hope the trading volume to continue to grow, which is very exciting to see. Next slide, please. So while I hope we've answered a number of your questions, and we're going to go through Q&A in a little bit, I want to highlight that we have a growing list of resources available to guide your research on CDRs, all of which can be found on our dedicated website, which is listed here. And so when you get the slides afterwards, you can see them. The website is cdr.cibc.com. On this website, we have a CDR directory where you can find the current lineup, the current roster of CDRs available, the CDR ratios of each CDR, the current FX rate for the hedge that we've used for each CDR, and the legal documents for each CDR. On the corporate actions page, you can find all of our announcements for dividends or other changes such as QSIPs or ticker changes. As an example, we had a ticker and a name change for the Facebook CDR to Meta CDR, and a ticker change from FACE to MVRS. On the resources page, you can find educational videos, investor brochures, legal documents, and an exhaustive and growing FAQ section that we've been building based on client and advisor research. The NEO Exchange also has a dedicated CDR page on its website, as well as individual pages for each CDR where you can find real-time market data and other trading information. And of course, we are always here and happy to answer any questions you may have or take any feedback through our general mailbox, which is cdr.info@cibc.com. We're now going to move to the Q&A section of this presentation. So if we can move to the next slide, we can start the Q&A. Thank you to all who have sent in questions in advance. Alex,
Right.
I think you're going to answer the first.
Yeah, I'll start things off. So the first question is, how do I actually buy CDRs? Is it the same as trading other stocks? So you can go into your trading platform and enter the ticker. It should show both the US stock and CDR. You'll be able to tell the difference by the full security name because a CDR will have CDR in its full name. And you may be also able to see a little Canadian flag beside the CDR depending on your trading platform. Then you can go and enter the trade, buy or sell for the CDR just like any other stock.
All right, the second question I'll take, and it's about fractional shares. What are the benefits, and is there any downside or risk by holding fractional shares? So great that we're getting a question on fractional shares. Alex took you through the 3 key value propositions of benefits of investing in CDRs, and fractional share ownership is one. So the benefit, to reiterate, is that you don't need to put up the $5,000 to buy a single stock like you would if you wanted to buy Amazon.com in US dollars. So this allows investors to more easily diversify their portfolios and makes it easier to do things like dollar cost averaging while investing. As for downsides, the risk of holding a fractional share is really the same as holding full shares. Clearly, if the stock goes down, as we've seen in a number of the shares backing CDRs as of late during this last couple months, and Stan's going to take you through that, as the market has been pretty volatile, the price of the CDRs will decline as well. Alex, you're up for number 3.
All right. How will Amazon's proposed 20-to-1 split around June 3rd affect a CDR? Anything CDR share owners should be aware of prior to the split? So I'll start off by saying that the economic exposure that CDR holders have will not be affected by this split. CDR holders are going to experience the same economic impact of a share split or consolidation, if that was to happen, as they would if the underlying shares were held directly in their accounts. So to ensure that this happens, the CDR ratio can simply be adjusted to account for the increased number of underlying shares as a result of the split. This will all happen automatically. CIBC will also post an announcement to the CDR website in the corporate actions page with this information.
All right, question number 4. How does CIBC make money on CDRs? Does CIBC charge a management fee such as we have with ETFs and mutual funds? So actually, this is something that I brought up in the tracking slide, and this is where the fees will come into play. So CIBC makes its money for managing the notional currency hedge. It's not a management fee like you would see in an ETF, because where there's no ETF manager or mutual fund manager, but it has the same impact on performance as it is a drag on the performance. So as I mentioned earlier, we're very transparent about the spread that we're earning, which can be up to 0.6% per annum. And that's highlighted in our legal documents in our investor brochure. And I just want to reiterate that while this is our source of revenue, the tracking difference that I brought up earlier between the shares and the CDR won't just be impacted by this fee. The other bits that can be impacted by that, the tracking difference can be impacted by is also like interest rate differentials and volatility of the market.
Great. Next question. So are there any plans to move the CDRs off the NEO exchange and have it trade on the TSX? Wouldn't the TSX offer more volume and other advantages over NEO? Canada is really fortunate to have a competitive stock exchange market, and we are always reviewing our partners to ensure that CDR investors have the best experience. To date, though, our partnership with NEO has been exceptional, and they have been very supportive of our business and its growth. That said, if in the future something changes, we can always revisit our listing venue. Back to you, Elliot.
All right, question 6 is the start of some tax questions. So I get the first one, which I think is easy. So will the CDRs be considered Canadian or US content for the purposes of the T1135 CRA form? We get this a lot. It's a question that's one of our FAQ type questions. So the answer is pretty brief. So CDRs will be considered specified foreign property for purposes of the Canadian specified foreign property reporting rules. So this means that T1135 reporting would be applicable.
All right, now I have like 5 questions in one. How do I get my dividends? Are the dividend yields and ex-dividend dates the same as the underlying US stocks? Are the CDRs subject to Canadian dividend tax credit? Will dividends be paid subject to the 15% withholding tax? And how does this change, I guess, depending on the account you're holding? So I'll start off by saying that dividends paid on the underlying shares will be passed through to CDR holders, but in Canadian dollars. It's still foreign income. While the ex and record dates will be the same, the payment date can be up to 5 business days later on the CDR, and this is to facilitate the cash flow to CDR holders, because we have to receive the cash first on the underlying shares before passing it through. Information on the dividend dates and payment amounts for CDR can be found on the CDR website on that corporate actions page. So you can, if you go there, you'll see that there's been a number of dividend payments already made. And with respect to US withholding tax, this may apply depending on the account in the same way that it would if investors held the US shares directly. So again, CDR holders should ensure that they have an up-to-date W8 form on file with their dealer.
Okay, glad that you took the 3-in-1 question. Next question is CIBC. Does CIBC have any concerns about the volumes traded on any of the CDRs so far? So I've talked a little bit about liquidity in general, and I definitely mentioned how we've been really happy to have seen the volume pick up on the names specifically during earnings season that we just went through in early February. But I'm going to start off by saying we've been thrilled with the growth of the program to date. We've been thrilled with the reception we've been getting from the media, like articles that have been posted in the Globe and Mail and the Financial Post, which have been really positive. And the positive feedback we've got from many investors like yourselves who've been tuning in today. And it has all resulted in a very strong adoption for the program. In terms of volume traded, there's certainly some CDRs that are more active than others, but that's probably natural with any business. You're going to have your popular names and your unpopular names, the 80-20 rule. But given that half of the program was literally launched within the last 3 months, we had a bunch of names that were launched in February and some in December before that. We're still in the very early stages of this product's growth, we believe anyway. And so even the ones that haven't taken off, we're not nervous, we don't have any concerns. We think it's really important for the overall program to have a diverse lineup of CDRs that isn't just tech focused, that isn't just the names of the hot names. So we want a program that has good diversity by sector. And so that's where we're looking to grow. So even if there are names that don't catch on, we're going to stick with them and hope to grow the platform as we continue to age in the product's life cycle.
Awesome. So what criteria has CIBC used to pick the stocks for CDRs? How many CDRs does CIBC consider adding in Canada? I heard 50. What new CDRs can we expect to see next? I'll start off by saying we pick names that would resonate, or at least we thought would resonate with Canadian investors, and we continue to listen to feedback and requests that come in. The names selected are all large cap, highly liquid names from the US market and from the S&P 500. We have standards which are described in our prospectus, and those include things like liquidity and market cap thresholds. With regards to how many more CDRs we'll be adding this year, we'll base that obviously on the demand we see. We're at 23 CDRs now, and if the growth continues at this pace, we can definitely see us having 40 or more this year. And tentatively, we are planning to launch more this spring.
All right, more questions on the growth in the future, which is fantastic. Question 10 is any update on whether the CDRs will have an options market in the future? So I use the expression we have to walk before we run. So we get inquiries about options on CDRs quite a bit, and it's definitely on our list, our growing list of growth initiatives that we are working on. Unfortunately, it's not something that is imminent, but we do believe it will be something you will see at some point in the future of the program, because obviously we're hearing about it from clients, and so we want to grow based on what our clients are asking us for. So patience is, I guess, my ask on for this question.
Okay, next question is, do brokers allow placement of a stop limit order? My broker didn't accept one for my Visa CDR. With respect to stop limit orders, those are currently not supported on the NEO exchange. I'm not sure how that plays out at each individual broker with respect to other exchanges, though.
All right, next question. Is the DRIP, the dividend reinvestment plan, available for CDRs? So the answer to this one is no, there is currently no DRIP program available for CDRs.
Another one that's going to be a short answer. Could we see an ETF on the CDRs in the near future? So the answer is it is completely possible. An ETF issuer may decide to include CDRs in their portfolios.
And I have the distinguished honor for answering the last prepared or previously provided question, which is 14. What new CDRs are in the works? Are other foreign countries being considered? So our initial list of CDRs had a tech focus. And so we mentioned this earlier, Alex just mentioned it. So the FANG names were the ones that were most actively traded in Canada. So that's where we started. And we've since rounded out the lineup with, still a tech heavy focus, but we've rounded it out with other names like Disney and Visa and Berkshire and JP Morgan to round out the lineup and provide a little bit more of sector diversification. As we've said a number of times, we're going to continue to add names that our clients are requesting. And so this next batch of CDRs that we hope to have out soon, they're still going to be US names, but they're going to continue the trend of providing more sector diversification. To the extent that people have interest in global names, please do send those suggestions through to us. You can send it through our general mailbox. You can send them through to the NEOS mailbox, but that's how we're basing our growth. It still seems that the US names are where we're seeing the most demand for new names to be added. Stan, that was the end of our responses to the prepared questions. I don't know if there were any other questions that people have submitted.
There were a few questions submitted, Elliot, but you've covered most of them, I think, if not all. Michael had an interesting question or comment, and it isn't currency risk embedded in the underlying price move of the U.S. stock. So maybe you could comment around that. That would be appreciated.
Sure, I can take that, and Alex, feel free to jump in. Yeah, like these are global companies, and so global companies do business in many countries, and so they have currency exposure to the extent that a majority of their revenues or the majority of their costs are in one currency. So there is definitely some currency exposure that each of these businesses have. We are just here to help hedge the currency risk of the investment that you're making in the business and leaving out the business's own exposure to the currency market. So if they choose to hedge their currency from their revenues and their expenses, that's the business side. And here is like kind of, I'll call it the, as an independent investor investing in that business, this is the hedge that we're providing. Alex, anything you want to add there?
Nope, I think that's good. Thanks.
All right, and Margaret had a question again with the T1135. What are the implications of purchasing the CDRs in a Canadian registered retirement savings plan account, the RRSP?
So I guess we would just say, and we have this on our FAQ, that they are eligible investments for RRSPs, just like holding the underlying share directly.
Okay, and Andre wishes to know, are the CDRs shortable? Can you short them?
My recommendation, if you want to short one of these securities, would be to short the US listed shares. I haven't admittedly had a recent conversation with the securities lending desk at CIBC, but the cost to short a share will depend on the availability that they have to borrow those shares. And my guess is that you'll find far cheaper ways to short it by shorting the US share directly, because the availability to source that borrowed share would be much easier in the US. So if you want to short one of these names, I would do it on the US side of your account.
All right, and there might be just one last one that's really interesting here from Neil. He says, can you trade a CDR on a US holiday? Pretty sure you can't trade it if the TSX is closed, Neil, but it's an interesting comment about tracking.
Alex, Alex, do you want to take it?
Yeah, I can start. So yes, you're correct, Stan. If the TSX or NEO, Canadian markets are closed, you won't be able to trade the CDR. However, there are some days where the US market is closed, but the Canadian market is still open. So that means you technically can trade the CDR. However, you may see very wide spreads. And so if you don't need to trade on those days, it would be better to avoid them. Elliot, anything else you want to add?
I 100% agree with you. The spreads from the bid offer will be much wider on those days because our market makers don't have the ability to manage the risk on their hedge the same way they would if the US market was open. So please take caution on those trading days for sure.
All right, well, that's fantastic. Thank you so much, Alex and Elliot. Just an excellent presentation again, and wonderful to hear about the progress. A lot of new positions since we last met in November, so it's great to get that update. And I'm going to go through a little bit more of the names again, just to follow up and show a little bit how I look to trade these personally, and have been doing so already. And maybe I should just ask, just if you already have invested in the CDRs, any of them, either 1 or 5 or 10 or all 23, maybe just chat in a 5 just to let me know if you have already invested in the CDRs. And yeah, seeing lots of 5s. And Werner says, great information. Thank you. Rajan says, very interesting. And Jake says, volume picking up. So 5. Yeah. Ron, not yet. Tom, Adrian, yeah, that's awesome. That's awesome. Well, I'm going to show you a little bit in the VectorVest program what I'm looking for on that, and we'll give you some examples here. So thanks very much. I'm looking over at the YouTube, and some fives are coming in over there as well. So Alex and Elliot, I think you've really struck a good note with your presentation and the CDRs. We really appreciate it. So Alex and Elliot are going to stick around, and there may be questions that come up after or during my presentation, and so that would be great. I just have to read Tom's comment because I think it's true for a lot of us. He says, in fact, these CDRs have been a game changer for me. Never really wanted to invest in US companies directly. And I think that's probably true for a lot of folks, Tom, a lot of investors that maybe have been worried about the currency risk and or just some of the price tag that we see on some of those market cap giants on the US side. So that's a great comment. Really appreciate it. Tarek says not yet, but I'm sure it'll be something to look at. All right, well, listen, let's move on, and I'll just take us through how to analyze and track performance of these CDRs in the VectorVest software. And I'll just show you how we can do that in a couple of ways with watch lists and the portfolio manager. So, by the way, stock ideas for the next CDR submitted by VectorVest subscribers in November. The items that I've highlighted in green are the requests that came in and have already been added to the CDR lineup by the CIBC team. So there's some other names on here that maybe will be looked at. I think Albert just chatted in. John Deere would be one he would like to see. Not sure if it's part of this list, but Elliot gave us ways that we can add to the list through that email. Steve is asking, how long does it take to add a new CDR to the CDR watch list? And our database team, Steve, is watching very closely on that. And typically it's same day or next day that those new names are being added. And here is that CDR watch list in the Canadian VectorVest software. It's under the special watch list tab over here on the left, and it's under CDRs. And these are the 23 names that we currently have for CDRs from the CIBC, and they're all here. Of course, the default sort in VectorVest is the value, safety, and timing. And you can see the other indicators here as well. The indicators won't always just exactly reflect the same levels as the US. I think some of them are kind of catching up a little bit in that way, but this is where you'll find them. And of course, volume is in here as well. Yeah, and Chris, that's a great comment. I do exactly the same. Chris says I track the CDR watch list on both the CAD, Canadian market, and the US markets. And that's what I've done, is created a watch list on the US side where we have that longer term history when we do our graphs and analysis. So definitely can work from that. And so here's that idea actually right here, Chris and everyone. You just create a group, if you like, using the little folder here. Maybe it's just easier to go right into the program and show it. If I can find the right, yeah. So there's the home page I'm in, and just over in the viewers tab, the watch list viewer. So you would just come in and left click under the drop down menu at the top left, create a new group. It'll ask you to give the group a name, and you can just call it CDRs. Click add. And then you would just add a new watch list right here. And I'll bring it over again to this screen and CDR watch list. And maybe you would put in the date or something like that, just to jog your memory on it when it was created. All right, so that's an easy way to do it, and then you just start to add your names. All 23 of them, and then you've got them. All right, and of course, once you've got them all in, you've got the analysis by value, safety, timing again. Again, these are the underlying shares of the CDRs. The fractional shares of these big companies are in your Canadian program offered by CIBC on the NEO network or NEO exchange. Once you've got them in, you can see the average values at the bottom left here as well, same as the Canadian watch list. And again, in Canada, if we go to the Viewers tab and watch list viewer, you would just scroll down, and under special watch list, we have the CDRs. And here they are here. And if I right click on the bottom row, you can kind of see what the watch list has been doing recently. It's been a little bit choppy and then really started to fall with Netflix and PayPal leading the way down here. So just going to go in and show you a little bit about maybe a way you can have a better entry and look for those exits as well. So those CDR comparisons with the underlying stocks on the US side, I went through and I've just kind of did some quick tests based on the starting dates when the CDR was added by CIBC and into the VectorVest program, and then just at the date of close yesterday. And I personally think it's quite remarkable how close these are. Here's Amazon over the last several months. The underlying symbol is down 12.6%, and the CDR is down 13.4%. So just basically a 1% difference there. Tesla 23.1 for the underlying, 21.6 for the CDR, and they're just all very, very close, within 1 or 2% as you look from left to right. So they've done a very good job of tracking and making those CDRs reflect the underlying shares. So I did a little exercise for the presentation today, and I just basically added the CDRs since inception into the portfolio manager in VectorVest. Now, I don't think any of us would just go ahead and buy a CDR just because CIBC has just added it. We want to wait for a good entry, and we may not want to just buy and hold because we've seen what has happened with PayPal and Netflix, for example, and really the overall portfolio would be down quite a bit, down about 5.9%. So these reflect the positions that I added based on when the CDR was added by CIBC. The second portfolio graph, I did some risk management. I waited for the perfect entry, sort of buying on the dips, and then looking for the Guppy EMA setup that I think a lot of you or most of you are familiar with, where we do see the momentum starting to move behind the uptrend, and then exiting the position as soon as we see the momentum starting to wane and getting out. And it makes quite a difference. And so I wanted to show this because I think it's important that we all recognize that these are great companies. Over time, they're going to do very well for you. But if you can get off to a good start with a safer entry, and especially in these volatile markets, manage your positions just a little bit more closely, I think it'll be helpful to you. Adrian, this is not a real life portfolio. This is me going in and looking at the graphs and saying, this is the entry here, this is the exit here. And I tried to be as conservative as I could on both sides, but you know, human nature, what it is, it's not going to be perfect by any means. For example, I'll just walk you through a couple here and then just kind of show you what I was looking at. So, for example, for me, an entry on Pfizer would have been here when the EMA squeezed, the 5, 8, and 13 started to move, squeeze together and then start to fan out. And we see the MACD down below, and I've got this funky MACD setting of 24, 55, and 18. It turned the histogram turned bullish here, and then it started to roll over here. So you start to, think about exiting a position. Everything is kind of rolling over. And in this market, if you've got a nice little profit, sometimes for me anyway, I think it's a good idea to take some profit and look for that next entry opportunity, which might have come down here when, if you're really buying on the dips and you're starting to see some bullish candlesticks show, you might come in a little bit earlier, but if you wait for the guppy squeeze entry, you're still going to get in on a pretty good level. Here's the 5 moving average of RT crossing above the 40. Adrian was just concerned that I could have retired again. Well, that 20% would be a pretty spectacular return, that's for sure. I'm in 3 of the CDRs and they've done very well, but my goal is to add a few more as we go along for sure. So that was the idea, and this is one of the ones that I own. Berkshire Hathaway, Warren Buffett's company, can't go too far wrong holding other good companies, and good entry, back here, and then you've got a nice profit. And as you start to roll over in my test model portfolio, I was selling somewhere in here, right? Saw the price sort of peak and then start to roll over, the 5 moving average of RT rolling over, the MACD on the downside, take some profit, and you can come back in again when there's another dip to buy into. These are dips. I didn't show any buys here, I don't think, but this is a good entry. Didn't make any money there, might have lost money. And then this is a good entry and did okay. So that was the idea behind this. So anyway. Yeah, Ron, this is basically the Midas touch, right? Basically with the 5 and 40 moving average in the bottom part of the graph, that's essentially the Midas touch graph layout with the guppy up on top, except I'm using the EMA squeeze with the 5, 8, and 13 EMAs up at the top. And we'll go through these graphs in a little bit more detail when I go through the slides. Just wanted to show you a few things here. Thank you very much for your kind comment, Barry. Nice work, folks, he says. So thank you, Alex and Elliot, for that. Just passing it along. Ken says, do you use the US graph for these? I definitely graphed them before I bought them, Ken. I'm showing you the Canadian graphs here, but the US graphs have so much more history. Okay. And then just looking at the portfolio summaries between the, it's not really buy and hold, because I recognize that you wouldn't necessarily buy the CDR just because it's sort of come onto the market for us here in Canada. You would wait for a proper entry, but the gain loss is about 6%, and the year to date down 0.87. If you just kind of went ahead willy-nilly and just bought them and held them, there's been a couple of pretty strong losers in there. But using a little bit of risk management with good entries and stop losses that I will admit in a back test using graphs is arbitrary. But hard, even though I wasn't looking at the right edge, hard not to know what the right edge really looked like. So there might have been a bit of fudging there. I will grant you that. But I'm just showing that with good entries and rules-based exits, you can do quite well with this approach. Charles, you might be right. I don't know. Not an accountant. But Charles says CDRs are best to invest in a Canadian TFSA account. So they can certainly grow nicely in a TFSA. You don't pay taxes on your gains. Just know you don't get any relief from your losses in a TFSA either. So just before we look at some graphs, to give you some tips on selling in what I consider an uncertain, volatile market, and we've been in that for a few weeks and months now. So rules on the buying, we want to buy on the dips. We can use the Guppy EMA squeeze rules. So you do get a good entry with the 40 moving average of RT sort of ramping up, giving us that early thrust to the upside. You can use the MACD when the histogram turns bullish. You can use a 5 moving average of RT turning up if you want to be really aggressive and buy on a significant dip when the 5 moving average of RT has fallen and fallen and fallen, and then it starts to turn up quite strongly in a couple of days. That can be a good entry. And I'm saying that because we know we're buying good quality stocks. These are companies that are high market cap, recognizable names, widely traded on the US side, and of course that translates over to the Canadian CDRs. So you can feel fairly comfortable buying on a really sharp dip when the 5 moving average of RT starts going up. You can use the EMA squeeze methodology. The 5, 8, and 13 EMAs band are above the investors band and starting to fan out. Can be a very strong entry. And the 5 moving average of RT crossing above the 40 moving average of RT is another great entry. And of course, we can search on that. And we can look for bullish candlesticks when the market is rising and that sort of thing. And then the rules for selling, I think in this market, you kind of want to take your profits when you get them. So when the 5 and 8 EMAs start turning down, in other words, they've been fanning out and they're going up, and then all of a sudden the two faster ones, the 5 and the 8, start squeezing together at the top, that might be an early exit. Okay. And then the 5 MA of RT turning down off a major high, can be an exit point as well. And the 5 EMA crossing below the 813 EMA is a little more prudent. You'll give some money back, of course, if you wait for the 5 to cross below the 8 and the 13, but it will also keep you in some trades that you might have otherwise exited. And the 5 moving average of RT crossing below the 40, should be an exit signal as well. Maybe a prudent exit signal as opposed to an aggressive exit. And you might see the MACD histogram turning bearish. It may not be sort of below the zero line, but it could be starting to, the bars could be starting to weaken and grow shorter. Phil says, when you refer to the MACD bullish or bearish, do you mean crossing the zero line? I do, but I also, Phil, I'm looking at when I see this, especially with this setup, this setting, the 24, 55, and 18 on the MACD, you're getting bigger bars and longer duration of the bars. And so when you start to see a lengthy decline, you know there's potentially trouble ahead, especially when you're seeing it also on the 5 moving average of RT in green. Okay, so just using a bit of caution in this market is really a good idea, I think. Robert is asking if I want to put 5,000 Canadian into a particular stock, do I have to divide the 5K into the CDR's price? No, you would, Robert, you would just buy the CDR based on the current price on the Canadian market, which is the NEO exchange. So you would just put your order in the normal way. You can use a market order, which, you know, with the Canadian CDRs, some of the volumes are still fairly low. You could go with a market order and get filled right away, or you can use a buy on stop limit order, and that works out pretty well. Double-edged sword with the buy on stop limit orders. I had a buy on stop limit order with Pfizer, and it gapped up above my limit, and I missed out on what's turning out to be a pretty good move in Pfizer. It would have been the 4th one that I was buying. So anyway, all right. So that's what I'm looking for, Phil. This is sloping down, right? So you start to use a little more caution, especially when you look at price action. You look at the 5, the 8, and the 13, especially the 5 and the 8 are turning lower sharply. You know, you've got a little bit of profit, just take it. You know, is one choice. Tucker, I think the Amazon split was covered in the earlier part, so I don't think I want to go through all that again. Okay. All right. Let's just see what else we got here. I just want to wrap up pretty quickly here, but I just wanted to go through those rules. This is the setup again, so you'll get the slides. This is the Guppy EMA squeeze setup. You'll see the MACD that I'm using over here. You'll see the 5 and 40 moving averages on RT, and you'll be able to set up your EMAs for the EMA squeeze, the 5, 8, and 13 up at the top, and the investors band, these longer EMAs starting at the 30 going down to the 60 at the bottom. And one of the key things is this thrust of the 40 moving average to the upside. That's where a lot of the momentum is coming from. You can see the MACD also gaining momentum. When you have an inflection like we have sort of right here early in the move, that's a good opportunity to either add shares or buy new. That works pretty well. All right. Any questions about the setup, about anything that we've talked about with the watch lists? Any last minute questions for Alex or Elliot? Yeah, Andre says, very interesting. We can see the value with stops and with the VectorVest. Yeah, you bet. You bet. Just when I look at let me just go over to the US side for a quick minute here and look at the graphs here. Some of you might be new to VectorVest, and just it really is easy to set up your graph layout. If you come up to the price and right click, this is where you'll add the moving average, exponential. So you can add your exponential moving averages. Start with the number that's closest to the one you want to add, and then use your up and down arrows to change it. And same with the RT. We have the RT40, and it's all based on the RT indicator, which is a default in the VectorVest program. Just right click, add moving average, simple, and then start with a 10 and move it to a 5, and you'll have the 40 as well. Pretty easy to set it all up. And of course, the MACD, if you want to change the settings, just right click, change settings, opens up a new drop down, and you can change the default settings to this funky setting or leave it the way it is. Okay. Ken says new buy on NVIDIA. Yeah, it's right there at the top right. There's the new buy rating, just starting to make a nice move after a nice base. So this is a great example of buying on the dip. There is some resistance overhead, but it's looking pretty good. All right. Lan is asking, can you set up these buy and sell rules in portfolio management? You can set up the buys. You can run searches on the buys. Lan, the sell rules, you would need to look at the graphs. Okay. But I put them all in Portfolio Manager, and that's a great way to track them here to see what's going on, and you can set up alerts in Portfolio Managers as well. Charles is asking, are the gains or losses proportional to the US underlying or real stock? He says, yes, Charles, that's the idea. If I go back to the earlier slide, you can see the gains and losses are very close. This is the Canadian CDRs at the right, and they're within 1% or 2 of the underlying U.S. shares in, I think, every case. They're all very, very close. Here's Berkshire, for example, 23.6% on the U.S. side from December 2nd. It became a CDR in Canada on December 2nd. And from there, it's up 23.3%. They're very, very close. Yeah, good question. Yeah, Gil, I agree with you. He says, hopefully the PFE uptrend is not the same as COVID-19. And Peggy, how do you add the earnings date? That's in the layout on the portfolio. So you'll need to be in the portfolio manager. Let's see, I think I had it open in Canada, so I'll just go right to Canada here. So when you right click and click on layout, and there's the earnings date, and it came from the left side of I highlight it. So it came from the left side on the field list under capital appreciation. Just highlight it again and click on the arrow to the right, and then you can highlight it and move it up right front and center. All right. Well, folks, we've gone our hour, and I think we've answered a lot of your questions, and I want to thank Alex and Elliot again from CIBC. Are there any last-minute questions that I might have missed along the way, especially for our guests today? Michael V says, very good tips for buying and selling rules. Thank you. Andrew, we'll kind of stick to the CDRs today. If you join in our our Tuesday afternoon Q&A. We do analyze stock requests, I guess. So we're happy to do that on Tuesdays. Mary says, what did they mean by interest rate as a cost? Alex or Elliot, what did you mean by interest rate as a cost?
Sure, I can answer it. It's Elliot here. Thanks for the question. It's a bit of a technical thing, but the way that a foreign exchange hedge works is you're basically long one currency, so you're owning the Canadian dollar security, so you're long Canadian interest rates, and you're short the US dollar as your hedge, so you're short US dollar interest rates. So in effect, you're growing at Canadian interest rates, and you're detracting at US interest rates. So that difference is impacts the performance, but it's the overnight rates, and generally the overnight rates are basically, and they've been zero together for some time. Now interest rates are starting to rise, but they're rising both in Canada and the US, and it's the differential that you're looking at there. If you Google, I don't know, currency hedged interest rate differential, you'll get a Investopedia or Wikipedia explanation that can give you even more details than I just did.
All right. Well, listen, lots of great comments coming in, and looks like this was a very worthwhile session again. Really appreciate having the inside scoop from our guests at CIBC. We've got a lot of great answers to a lot of great questions. So thank you so much for all of that. I did have a question about the recording. It will be on VectorVest YouTube. If you go to the VectorVest YouTube channel, you can just type in VectorVest YouTube channel into the internet Google search bar. It'll take you there, and it'll be right up front and center. So you can certainly watch it, within a few minutes. It'll be there for you. And then VectorVest on Monday will be sending out the replay link to everyone as well, with a link to the slides. So you'll have that on Monday. All right. Thank you very much, Linda. Appreciate it. Michael, thank you for that. And Lan says, very helpful guide on buying and selling rules. Werner's asking, is there a special form needed from the broker to trade the CDRs? No, I traded mine on Questrade, Werner, and it was just as easy as can be. Nothing to fill in. They're just like any other stock that you're trading. All right, Réjean says, thank you, Stan, and the CIBC presenters. So, a lot of great questions. Thank you so much, everyone. Listen, have a great rest of your weekend. And enjoy the warmer weather that's coming our way, and take care, everyone. And we'll see you again at the next webinar. Thanks, everyone.